Hey everyone, Brian Montez from the Disciplined Traders Academy. Going to provide you with a stock market recap for S&P, SPY, and for the Qs. So coming out of the week, trading week, which closed June 2nd, 2023, and we are headed into the trading week starting June 5th, 2023. So obviously we've had some big moves in the market, right? NVIDIA knocked it out of the park. AI is all the rage right now. That seems to be driving stocks. Any company that is doing its earnings calls, the more they mention AI, the more it seems to juice the stock. So AI is the shiny new toy syndrome at the moment for the stock market. So we've definitely seen a breakout occur. So starting with the S&P and looking at the SPY chart specifically, um, it had been in this chop range going back to April of this year and had been using the 413, 414 area as a level of resistance, starting back here in January, and then continued to use this as a level of resistance from early April all the way through to May. So we did get this breakout here, and it seems as though it's held it and has officially flipped this level of resistance to now a level of support. So in this rising channel here, this rising wedge, I should say, the breakout has finally occurred and has sustained. So this 413, 414 level now becomes a level of support. What are we seeing now? Well, it looks the S&P certainly has the potential now to grind its way up to August highs. And so it's very possible that what we're going to see over the next couple of months is a retest of the August highs, which puts us up to around 427, 431.75. So right around that mark. And that's where you see another heavy level of resistance at those August highs. So it's very possible that the S&P could grind up a little bit higher. Especially if you take a look at MACD, if you like to use MACD as one of your oscillating indicators, you can see that the MACD still has a little bit of room to go, right? It's starting to curl up. It sits at about 3.29 right now. And where the index starts to come down is when that MACD starts to get north of 6. So there's definitely some room based on indicators for the S&P to grind its way higher and test that 427, 431 level, somewhere around there. May not happen in the next week or two, right? It may go sideways for a little while, may have somewhat of a pullback since there's been such a run up. It wouldn't be uncommon for this to pull back a little bit, but it's definitely feasible to see the S&P continue over the summer to grind up to the August highs. And keep in mind, volume over the summer tends to get lower, but that doesn't mean that a stock or an index can't still work its way up through the summer months. It certainly can. We just tend to see a drop off in volume as we go into summer. So definitely a new pattern here for the S&P, and it'll be interesting to see what it does over the next few weeks. And then we go to the Qs. A little bit different story here on the Qs because we're still between this range of 335 up to about 360. So Qs definitely have had a good run up going back to October of last year, right off those October lows. You have this rising channel, rising wedge here that's been pushing, and of course a huge breakout over the past few days here with just two very bullish candles. So it's broken out the top side of that rising wedge and continued to climb even higher on Friday. So from that perspective, that's actually a weekly chart. So we go to the daily chart, and that's what we get, right? So a little bit different picture of that rising wedge going back to October. What to expect on the Qs? Again, this is all speculation, of course. Anything could happen, but from a practical standpoint, we definitely, I think what will happen is, the Qs are going to kind of grind around the 360, 361 area, right around this level of resistance for a while. Probably go sideways a little bit. Definitely, high probability we'll see a little bit of consolidation. or a pullback, of course. And it just depends on what happens over the next couple of months with whether or not money continues to flow into the Nasdaq tech sector. Um, what we may see is some profit taking over summer, right? People who, for whatever reason, got in on the August lows, dip buying, sorry, not got in the August lows, but were in before that, right? In earlier August, before we hit the August lows, or even going back to March of last year. Anybody who's been in that long may now be starting to get back to a break-even level. So we might see some profit taking on this. And we certainly may start to see an additional rotation of money, right? Money that starts to now flow out of the NASDAQ, profit taking, if you will, because there's been such a run up, and a rotation into some of the laggards that are just so far behind, and people start putting money into those laggards over the next few summer months. So that is a possibility. So we're definitely going to be wanting to watch the different sectors and see if money starts flowing into some of the sectors that have been lagging. So last but not least, let's take a look at not the Qs, let's take a look at the VIX. The settings here, I think the white actually shows up a lot better on video, so we're going to be trying the white out. Okay, the VIX, wow, I mean, just super, super low, below 15. So continues to drop well below this rising trend line here. Again, when the VIX gets this low, the last thing we want to do as traders is get complacent, right? This is where mistakes start to happen, when we get complacent with a VIX that is this low. Um, whether or not you believe we're back into a bull market, which we very well could be. There's a lot of there's a strong thesis, especially from a technical standpoint. We know that the Nasdaq is definitely back into bull market territory from a technical perspective, and I think the S&P is very close to being back into that as well. And in a bull market, typically things are a little less choppy. So while there are still days where the market sells off and there's pullbacks and sideways days, people tend to make their money in a bull market. But the challenge is making sure that you don't get too complacent, right? Because that VIX is so low, we start to get overconfident in our ability to trade. We think we can do no wrong, and the market will quickly remind us who's in charge. So just because this VIX is so low does not mean that we should get complacent about our trades. It doesn't mean that we should stop looking at reward risk ratio and managing all the risk in every single trade that we make. So be interesting to see if the VIX continues to stay around 15 or what happens over the summer months. So that is your market update for closing out the week of June 2nd.